Hi, YouTube. I'm excited to be here. I want to share the strategy that I've been using in the stock market. I know stock market, you're thinking, don't say that. The market is coming down. I'm scared. Well, I'm here to tell you, don't be scared. I'll walk you through the strategy. It's something that has consistently been making me money in the stock market. I've been doing this more than 20 years. I've been through the ups, the downs, and right now we're going through the downs of the market. But it's okay because I'm still making money. It does not matter. And when I show you how to do this, you're going to say, why am I not doing this? Because usually people, when they play in the market, they want it to go up, you want it to go down. And it's kind of nerve-wracking because you need to be right in a certain amount of time. If you're not, the value in those options of those calls or your puts, you may be right, but you're going to be a day late and a dollar short. That's what's going to happen. In my strategy, I'm always late, and it's great because with this strategy, the more time you let go by, the more money you're going to keep in your pocket. So let me show you, okay? One moment. This is how much I've made so far, and we're only in March. I've made $50,000 using this strategy. Here we are in January. I did have one loss in January, but overall you can see how much I've made, right? 6,000 here, almost 4,000 there, 10,000 there. That's just January. Oh, and by the way, I was on vacation the second week in January. I was laying in an island of St. Martin, still making money. All right, so here we are, February. I made, 48, 28, 28, 2,000. I did, again, have two losses, and I want to point out the losses. Again, nothing is 100%. The consistency, though, is overall, that's what counts. I may have a loss one day, but the next day, the next couple days, I will make it back and more. So I just want to show you. I'm not perfect, definitely not perfect, but I want to just let you know. Here we are for March. We are March, and today I made 5,300. I was just so excited today. I was done trading by 11:30, and I said, now what do I do with my time? I went to get lunch. And then I said, all right, now what? And I went to get a massage. These are the things I do with my time because the market is amazing. And if you know how to maneuver it, more power to you. So let me teach you how I do what I do so that you can also get massages on a Monday because why not? All right, so let's just do a little review of calls. When you're buying a call, right, you're calling somebody up, you want the market to go up. If you're buying a put, you're putting something down, you want the market to go down. Usually that's how we play. When you buy shares, you want it to go up. If you're shorting shares, you want it to go down. But that's the idea, right? But there is no real strategy of what happens if the market just sits there. And the market sits there a lot. The market will most likely sit there. I call it coiling. It's coiling, 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 and then boing, like it finally goes. Most of the time, we're just sitting there. And that's where I make my money. So I also like soccer. So this is a way I'm going to explain to you how I play this. I like to play games. Soccer to me is an easy way. I enjoy watching it, and it's an easy way for me to explain it to you. But if you want to think football, hockey, whatever, anything that has two goalposts, perfect. All right, so today, I said, all right, this is going to be my first goalpost here, and we'll do one up here because I'll explain it how you can play both sides. But usually when you're at the game, right, you're rooting for your team. So let's say this is our goalpost here, right? This is ours. We don't want the other team to score here, all right? So the front of this goalpost, if the ball were to go through it, they score. This is the leg, the most important leg. This leg is the leg I'm selling. When you're selling something, people are giving you money, right? So that's even more important too, is the fact that when you're buying a call, you're buying put, automatically you're already spending money. Like you're already in this. When you're playing this strategy, they're paying you to enter this strategy. So already you're ahead of the game, just saying. So then the second, because we need two legs to this, and the goalpost has two legs, right? Well, the soccer one does. So this is the leg we're buying. So let's say the front one, since we're selling, making this super easy, is $100, right? Let's say, so they gave us $100. Now I need to buy this back leg. Let's say this back leg now is 30 cents. So total, I have $70 in my pocket right now. Now what needs to happen? What needs to happen is my fullbacks, my halfbacks, my goalies, they all need to get in the game, and they all need to keep the ball away from my goalposts, right? So my defense in this case is this red line. This is my 300 SMA. This is my 200 SMA. This is my 100. And this is my 50. So one of those has to keep the ball away from going in, right? I always think of it because I'm short, right? So I always think of it, if I saw some 6-foot man coming my way, I'd be like, oh boy, right? This is my 300. That's a big boy right there. The 200 is another big boy. So if that happens to break through, there may be a problem. But the probability of that happening usually is not very high. So I have two big boys here protecting me from them scoring on me. So what happens is, if the game stays above my goal here, amazing. If it goes way above, it starts going this other direction, even better, because I can get out of this play earlier if I want to. If I want to collect the whole $70, I do have to wait till 4 o'clock. But usually what tends to happen, and if I'm saying I'm not going to take any chances today, but I'm up 90%, I will close it at 5 cents. But something you can do, even if you don't want to wait till almost the end, you could close this earlier. As long as time goes by, there's more and more value, right? This is important. More and more value in the 70 cents of that premium that I can close it out. So maybe I could close it out for 50 instead of 70 and say, you know what? I have to go to my massage and I don't want to play, risk this. So I'll take 50 of that 70. Thank you very much, and talk to you tomorrow. That's one way, right? Or me, I knew that these guys could have defended. I didn't hear any dings, alarm while I was getting a massage, so I was perfect. And I waited to 4 o'clock and I made my 100%. Perfect. So again, remember I was talking about what if the market stays right in the middle? Perfect, because now I feel like Monopoly on this one. This is my goalpost. This can be our goalpost also. And excuse my penmanship. Right? So let's say this is ours also. As long as the stock does not come up into this area, maybe for this one we could, again with the numbers here to make it easy, sold that. Let's say this is the same. Maybe they give us the same. That'd be amazing. We could have made $140 for the stock to stay away from here and here. That's called an iron condor. Those are the best days because you can play both sides if you wanted to. Amazing. Or you could leg in. Leg in means maybe this drops. I get into this side, which by the way is called a put credit spread, and I'll explain that in a minute. And then get in this, and then as this goes up, you wait to see, can it continue? Oh, it can't continue. It's about to drop. Perfect. I'm going to leg into this call credit spread. So, and when I said before, calls, you want to go up. But because this is ours now, right? This goalpost, this end zone, whatever you want to call it, this is ours. So it's a call. We receive a credit, right? Spread. So we don't want it to go in our goalpost. So this now, when you think calls, you think up. But in this case, no, this is our property. Nobody's coming in our property, right? So no, thank you. So put credit spread now. Up, right? You want it to go up. Usually you think puts are down, but not in this case. This is our property. No touchy. No touchy. Nobody's coming in there. So what else can I explain to you? Let's take a look at how the market usually trades. And I want to show you this because it's actually quite interesting when we're going to look at the market. because the market has been dropping. Yes, it has. Overall, yes, it could be a little scary. But if you segment this into little, just 1 or 2 days or a week, it's really not that scary because you can see here, oops, let's see, on this Monday, if this cooperates, 1 second, I just want to show you that it stays within the range. And once you start recognizing these things, that it stays within a range, you're like, wait, did that really happen? It just stayed in a range. All right, because Monday, we really stayed Tuesday, what is that? Yeah, here's all the way to Friday. We really didn't come out of this range. And if I can get this to click, there you go. We really stayed in a range. So what if I did a call credit spread here? And I just keep rinse and repeat type of thing here. Just maybe bringing it down a little bit. All right, because look at the big boy. We got that 6-foot big boy right here, the 200. We can just bring it down a little bit closer to that 200. And then maybe just play one side because, you know, the market is going down. So now, those particular days, I would say, you know what? Just play the call credit spread because it's going to go in your favor. And just bring it down. And that's it. I mean, don't overcomplicate things with the market because that's when we start getting to think that, you know, we're smarter, we should know better, you know, I don't know. Whatever it goes through people's minds that they think that they can figure it out, really just look at the patterns. Just look to see. Think of a game. Think of it. What are the probabilities that it's going to go into that level? I want to show you something else too. So let's say now we're looking at our option chain and you're thinking, okay, this sounds good. How do I put this into practice? All right, so here we go again with our soccer field. This is midfield. Notice how it went from purple to black here. So right where it changes, that's midfield. And you'll notice that midfield is 56.75, right? Because we're at the money. That's midfield. So let's say we had picked our levels down here. Just imagine that's your goal post right there, your end zones, whatever you're going to call it, right? Something like that. As long as the ball stays away. So let's say the worst case scenario, the ball is coming this way. This is the leg that's going to be in trouble. That's the leg you're selling because that's the one that pays more money. But I'm going to show you this too because it's even more common sense when you see it this way. Look at the ask. Look at this. Look at the numbers as they're getting smaller as it's coming down, right? Because if you're going to sell something, you would sell it for 24, right? And then buy something for 21 because that way you have money to do so. If the stock is going this way, think of it the same thing, right? Look at the ask. The ask is what you're selling, right? $22. You would sell it at 22. You would buy it at 20. So you're collecting the premium. You're using some of that premium in order to buy the other leg that you need to buy. That's helpful. One other little trick I'll leave you with is you're going to want to look at the delta. So what is delta? Delta has a couple definitions, but one that I'll share with you that is actually interesting is that when you're buying a call, you're buying a put, you look at delta. If it's delta 20 as an example, you have a 20% probability that it's going to go your way. I don't know, maybe is that probably more than a lottery ticket, but it's not really high probability. But there's always two sides to a market. What if now I'm selling, which is what we're doing, right? If you're selling a call or a put, the probability is on the opposite. So instead of being 20%, it's now 80%, right? It needs to equal 100. 20 would be the people that are buying. 80 would be the people that are selling. It equals 100, but I don't know about you. I would rather be on the 80% side, right? Super higher probability. Just think of it that way. So as I'm going down here, I'll look to see where is the probability here, 20 or less. So remember that you convert it, that's 80% that it's going to go your way. So 55.95, I would go here. And then I would say, all right, 55.95, that's 20%. At a minimum, that's where I'm going to be looking at. And here we are. Actually, that is what I played today. So it's interesting that it's that. So I played, see this purple? This was my my end zone, my goalpost today. And that it's saying that I could probably play for tomorrow. All right, so I hope you enjoyed it. I'm going to be making more videos explaining my little tricks of how I go about doing this, but please, if you're going to play the market, play something that's safer right now, because gambling right now in this market will possibly wipe you out. So don't do that. Go in with a strategy that I have tested, that other people that you know that you trust have tested, and can show you that they have been profitable. All right? So I hope you have a wonderful day. Talk soon. Take care. Bye.